Welcome to Trading Mastery Institute. Whatever that is being shared is of our opinion and not an advice way to enter the market. Okay, guys, so we always go back to basic when trading. Okay, so there is the three slide. Okay, before you every time you trade, you must have these three. Review back. Okay, when candlestick is at the buy zone, you're focusing to do a buy. Candlestick at the sell zone, you're focusing to do a sell. When it's in the neutral zone, don't do anything. Okay, don't look for a scalping or even intraday setup. Okay, so and then for the buy SOP, so number one, Bollinger Band squeeze. So look for that. Number two, candlestick close or protrude outside Bollinger Band. Number three, Chiku span close outside Bollinger Band. Okay. Number four, candlestick retrace and close back in buy zone. Novak flow and trend is in blue. So for you to do a buy. So for sell, same also, Bollinger Band must squeeze. Number two, candlestick close or protrude outside Bollinger Band. Then number three, Chiku span close outside Bollinger Band. Number four, candlestick retrace and close back in sell zone. Then Novak flow and trend is in red. So after you have refreshed your mind, okay, sometimes you can be confused, then we go to the chart. So at the chart, so beginning of the day, then we see a Bollinger squeeze. Okay, check. So number two, what you are looking for every 30 minutes, check. Or every 1 hour, okay, then you see there is candlestick close out or protrude out of the Bollinger Band, check. Then number three, check for the Chiku span. Okay, Chiku span is entering the Bollinger Band, so not good. Okay, then you wait for the next. So next there is a retracement, but it closed bearish. Okay, but it's not in the strong sell zone. So number four doesn't meet the criteria. Then we wait for the next candle, 30 minutes. So what happened? It went up, directly up. Okay, so for this instant, give you all a tip from the advanced class. Okay, so when this happen, you see that we want to look for a sell. Okay, then there is a bearish engulfing. So this is a single candlestick bearish engulfing that we are looking for. Okay, and it must be an engulf, not just cover the body. You know, it must cover the entire candlestick, this bullish candle. So for this instant, from the wick to the top, it covers all. Then for the next candle, we are looking for a sell actually. Then it become a buy, and it become a bullish engulfing, a very strong one that close above. So actually our entry is here for the advanced class. Okay, then I just share with you guys. And by the way, whatever we are sharing here is about 80%, okay, from the advanced lesson. So you can already make some money. Okay, of course, with proper guidance and coaching, your understanding will be even better. Okay, just add $100 only, guys. Okay, so for you guys, okay, what you need to do is wait again. Okay, there is still a bit of squeeze. Okay, there is the Bollinger Band doesn't open up. Then there is a candlestick close out of the Bollinger Band. The squeeze close out. So next we are looking for the Chiku span. Okay, Chiku span. Is it outside or inside? Okay. And then for this instant, check 26 candle. Okay, it is above the candlestick but still inside. So 50-50, not so good. Then what we do is we still can wait for a retracement, and then it close in the buy zone. Okay, then we check again the Chiku span. Where's the Chiku span? It close out of the Bollinger Band. Okay, that is a good sign. Then next, what you do is look for the Novak flow and trend is in blue. So next candle when you open, okay, you are supposed to just enter for M30 entry. Okay, so for this instant, if you enter, your stop loss is pretty huge. Okay, about 230 pip. Okay, 230 pip. And then it went up to about 370 pip around there. Okay, so you unable to get your 1:2 risk reward sometimes for M30 entry. So now you want to go to M5 to have a better entry. So M30 SOP is done. So now this is the M5 entry. Okay, so I mark all these three candle. Okay, so this is the bullish candle, bearish, and this is the nice entry here. So this is where the candlestick close. Now we go to the M5. Sorry, go to the M5. So this is the bullish candle. Okay, M30 trader enter here, then it retrace, then later it goes up, and then the third candle retrace again, then it go up. But for M5 entry, what we are looking for, we are looking for this is the first candle close, bullish, M30 entry. So we wait. Wait for what? We wait for the candlestick to close above this close candle. So over here, what we see, it went down. so we don't want to trade. Next start to goes up again. It doesn't close above, okay, above the candlestick close bullish candle. Then this one retrace here, then it went up, it closed above the candlestick M30 candlestick close bullish here. So next candle what you do, you enter a long, you retrace a bit only, a bit about 35 pips around there. Okay, so your stop loss usually is about 50 to 100 pips. Okay, 50 is around here, or 100 pips is around here. Okay, so over here it went up as high as about 300 pips. So your minimum target is 1 is to 2. Okay, so you are able to achieve. But at M5 and 3, as you can see, you can even achieve 1 is to 6 for 50 pip stop loss. For those who are new, who do not have the confidence, okay, you have 100 pip stop loss, so that will be about 1 is to 3. Okay, and then there is also question on how, when we are supposed to maximize our profit. Okay, look at this M5. Okay, so this is the strategy just happened. You enter, and then it protrude out of the Bollinger Band, protrude out of the Bollinger Band. So meaning there is still power for it to uh, move up. Okay, so it close out of the Bollinger Band, close out the Bollinger Band. Okay, this is a little bit, this is also a little bit. The body of the candle is still visible. Okay, then go up. Then suddenly over here it protrude, but there's no body. Okay, you are supposed to close here. So if you enter here to here, so you will get about 260 pip. Okay, and then if, like for instance, maybe some of you guys say it's still close above, out of the Bollinger Band, you still want to wait, then suddenly there is a bearish candle. So here you're supposed to close already. So if you enter over here, it's about 217 pips. So if you have a stop loss of 50 pip, it's still 1 is to 4. 100 pip, you still get a minimum of 1 is to 2. Okay, still there's good risk reward. So that is how we maximize our take profit. Okay, so next question is for the copy trade. Okay, what is the uh, expectation of the return? Okay, so you guys want to watch just a short clip of the video on what does the market actually people are looking for the return. Okay, let's watch the video.
My main goal is to be able to create a portfolio for both me and my wife to achieve some degree of financial independence. I've heard like 2.5 million as one of the numbers where people like to reach, and so if I could reach that, that would create like a huge safety net for both my wife and I.
Guys, as you have watched the video from the CNBC, so those high net worth client, okay, of investment, they are looking at about 4% return. Okay, so their investment target goal is about 2.5 million, and every year per annum they are looking for 4%. And of course, there is no trader portion because the trader already took earlier. Okay, so that's why over here there's no trader portion. They get 100 percent of the 4%. So this is 1 year. So they are looking at that kind of return. Okay, then second year, okay, that if they don't take out the money, it add on over here, become 2.6 million. And after that, they get about 104,000 for the second year, and so forth. Okay, this is the kind of investment they're looking at. So this is what is expected. Okay, so if you put your money in the bank itself, okay, you will get like 0.01 or that kind of percentage, not much. So this is a realistic kind of return we are looking at. But a lot of people in the market actually are searching for a 10% return. Okay, 10% return after 10 years, it will be double. Okay, let's say over here we change to a 10% return. 10% return. So 10% return. So every year the money will grow. So on the 10 year, roughly over here it is double. Okay, it's double. So this is education that is providing you all. So you all have a mindset of what are the genuine the banks are offering. Okay, over here. So usually people are looking at 10%, but on the 10 year the money is double. So even more than 10 years ago, I was looking at this kind of return. But of course, after taxes or this, we have not included. The return may be slightly lesser. Currency exchange also play a part. Australia and New Zealand used to give a very high uh, currency deposit okay, of about 12%, 10%, 8%, and it keep on decreasing. But you have to take into factor of the currency exchange, because Singapore dollar used to be much more stronger than the Aussie and New Zealand dollar at that point of time. Okay, so okay, you have seen this and are being educated on the returns of the investment world market. So now over here, I want you all to see the chart. Okay, this is our from our copy trade. Okay, for the first month, okay, it is profitable about 50 over percent. Second month is about 70 over percent. May, okay, suffer some loss of about 20 over percent. And then for this month, you still haven't closed, about 60 over percent. So on average return per month here is about 48.63%. Okay, 48 average. It can be higher or lower. Okay, so if we were to take a face value of 48%, so now we put in there in our Excel sheet 48%. So 48%, if you were to invest, okay, or put in, don't say invest lah, $1,000, I think even youngster student are spending this kind of money, okay, to buy their hobby, they go for travel. So that's why you don't talk to people of other or educated in investment. You know, if you say that you invest few $100 or few $1,000, it'd be a laughing stock for them. Okay, because if they know you are not an investor, your I mean income is not there to be qualified as an investor. So that's why when you go to the bank, sometimes the bank will ask your income or what is the quantum that you are looking to invest. So if you are talking about like 100, 500, or even 1,000, you know, they will straight away profile you. You're not fit to be an investor. So that's why there's always a form that you have to fill whether you are qualified to be a accredited investor. Okay, not only on that, on your education also, let me see. So let's say we put here $1,000. Okay, so this is just a spare change. Okay, so if let's say this money you are gone, okay, don't tell people that okay, my money gone, I invest $1,000. People will laugh at you. Okay, so but it's still money. Okay, so meaning you still have to be careful. Okay, out there there's a lot of promises showing very uh, high, extremely high returns. Okay, remember high returns meaning high risk as well. The money can go on, you know, very fast. So over here, let's say $1,000, 48%. So you will get $480. So out of this $480, okay, 60% goes to you, 40% go to the trader. Okay, the trader, because the trader work for you, 40%, you get more. So 288 to you. Okay, whereas for over here, straight away they just give you one number, 4%. Okay, 4%, but behind actually they took more already. So they only give you 4% out of an average of 48%. So more than 10 times, you know, they take from the investor. So after you understand this, so on the second month, okay, your account become $1,288. Okay, and then projection about 48% return monthly. Okay, from the data just now. So you get about $618. So there's a profit sharing. You take 60%, trader take 40%. So it will be $371. So third month, okay, will be total $1,659. Same also 48%, and then here it becomes $796. So you get 60%. So your account will be $2,137. Then this is what you bring back. Then same, so forth. You begin here and so forth. Okay, on the 7 month, 8 month, 9, okay, 10. So over here, as you can see, by 10 months, your account already grow more than double. Okay, the projection, if we can get this 48%. Okay, by a year, okay, projection is about 20,000. So you understand this? Okay. Okay, so if we were to follow what people are looking for, the big boys, okay, let's say if they were to put in the money $1,000, this is per annum, this is per month, so every month. So this is every year they want a 10%. Okay, so by the 13 month or the 12 month, okay, then it become double. Okay, but if for instance now the projection is at about 48%, but we didn't achieve every month a return of about 48%, okay, on average we only receive 10%. Okay, 10%, so meaning after 1 year your money double, still better than putting in the bank. Okay, and still the return are better, more than the 4% what the market is giving per annum, this one per month. Okay, so you can grow your income, I mean your investment better and faster. Okay, so let's say, okay, you have a goal. Okay, you have a goal. Okay, you know that $1,000, okay, is not an investment actually. It's just like spare change. Let's say you just, you know, because financial is a bit tight, okay, you just put about $10,000. Okay, we don't follow target of what is the market looking at millions. We put at a $10,000 return. And over here, if 10%, $10,000. Okay, if you were to set up business out there, you know, your rental is about I think more than 5,000. F&B, some shops, you know, at a very good location. It is like every month, you know, sometimes 5, 6, 7,000 kind of figure. If at a very popular tourist attraction, will be 10 to 15,000 or more. Okay, so imagine you are opening up that kind of business, but at a even lower quantum, okay, at about $10,000. So projection, okay, after 1 year, we can get about 200,000. If 10,000, let's say we are able to get this 48%, only 10%, okay, so it's still not bad. After 1 year, you double your money, anytime better. Okay, so this is the question on what is the market expectation, okay, of the return. Okay, so like what I mentioned, okay, this program, there is of course a risk of your money gone, maybe 50%, not 100%. Okay, our trader will of course try their very best to take care of the funds and grow for you guys. Okay, so while you're waiting, or maybe you're busy working, if you have a spare cash, okay, if you want to try, okay, you can try. Okay, be serious, okay, don't some of you guys get $100, $200, okay, can, but mean you have to have a goal in mind. Okay, slowly I will top up and grow my account to maybe about $10,000. Okay, and then this is where, if the market condition is favorable to us, if we can get at this return, okay, you know, this is a, I mean, substantial kind of money that you can grow. Okay, like for instance, after 1 year, you get about 200,000. Okay, take out 100,000, 108,000. Then here, make it into 100,000. So 100,000 for the second year, if it really go up, you know, to our same projection, market condition is favorable, you get about 2 million. This is life-changing kind of experience. You work your entire life, have you made this amount? Not? Majority, no. Okay, and let's say here, same also. Uh, if you put after 1 year, okay, you have 20,000 like just now. Oh, I mean, if it's 100,000 here, okay, and then it become a 10%. Okay, 10% return because market condition not favorable. Okay, you still get about 200,000. 200,000, you can take out your 100,000 and next year continue at 100,000. Okay, and if the market condition is favorable, become an average of about 48%, you get about $2 million. Okay, $2 million, which a lot of FMB out there, no hawker or even some retail shop, you know, they have to wake up early morning, attend to their shop with a lot of work, you know, physical work, less sleep, uh, problem with staffing, you know, headache with financing, you know, stress. But over here, there's none actually. There's none. So your stepping stone, you know, sometimes we have to have a projection, look at slowly to grow it to 10,000. Slowly to look it to grow at 10,000. Okay. When market condition is favorable on that year, okay, either 10% or 50, about 48%, okay, there is a potential for you to be a millionaire. Okay, this is kind of risk that sometimes we have to take. Okay, risk one, okay, you let someone manage it. Risk two is you yourself do it, learn slowly. Okay, and after you have built your wealth, of course, you will go to other kind of risk. Example, you want to go into property. Okay, property, of course, there is cycle also, you know. Now, seller are having a problem because there is a lot of property out in the market, and the economy condition, or the giants or even the banks, IT company are doing retrenchment. Okay, so there is always a risk in every business. Okay, even property, the safest is also investment in gold. At the same time, as you can see, gold, you know, about 5,000 have now gone to about hovering around 4,000. Okay, so there is always a cycle up and down. So from this egg that you know, grow, you can actually have other business. Then if you are into what you are doing, some of you guys I know are doing your online business, you can invest more, hire more people, pay more AI because you purchase in credit so that you can grow your business. Okay, so I hope this open up your mind and educate you on the world of investment. Okay, all the best.